Hey everybody, it's me, Gregory Mannarino. How are you today? It is Thursday, December 13th, 2018. Please allow me to do this. Happy birthday, Lori. My sister Lori's birthday today. So everyone, wish her a happy birthday. Anyway, let's talk here, people. Okay, here's the story, and it's a big one, seriously. I keep getting people asking me what I believe the Federal Reserve is going to do next week. Greg, are we going to get a rate hike? Greg, what's going to happen with the Federal Reserve? And as most of you know who follow this blog, nobody, and I mean nobody out here, I don't care where you want to look, has a better record of calling what the Federal Reserve will do than this guy you're looking at right here. Once in all of these years have I been wrong about what the Federal Reserve would do with regard to raising rates. So my record is second to none. And today I am prepared to explain to you what I believe is going to happen and how it will play out with regard to the bond market. It's going to be interesting. Here we go. So there's all this rhetoric right now from the president who wants the easy money to keep coming. I mean, absolutely contradicting candidate Trump, who thundered against the Federal Reserve, how they were behind the curve, how the Federal Reserve should have been raising rates, and they were only keeping rates suppressed to make Obama look good. I mean, seriously, that's his words. But now, since the Federal Reserve wants to nudge the federal funds rate, no, it's no good. But look, the fact of the matter is pretty straightforward. We need rates to normalize. This environment of extreme fakery needs to become real, and I mean actually real. Savers, people who have an interest-earning account, like a savings account, the middle class, most people I would hope have a savings account, are getting robbed blind, and they're too blind to see it. Suppressed rates have been killing them since the Federal Reserve stepped in here with quantitative easing 1, quantitative easing 2, Operation Twist, and more bond buying, which is going on today. That's how the Federal Reserve keeps rates low, by getting into the market. So, look, and the theme, I mean it's off the Richter scale, is that our economy is booming. We are doing so well. So you want me to believe, or they want us to believe, that a 25 basis point hike to the federal funds rate, let's decipher what Greg just said, a 0.25% raise to the extreme short end of the curve is going to bring all this down? No, it's a ploy, and unfortunately, it's a game that's being played here. More easy money is only going to inflate the stock market, rob savers, rob the middle class, and foster the wealth transfer that's been going on since 2008. The bubble in the stock market? No. The middle class is never allowed to keep their wealth. Never. The middle class is used as a pawn in a game to push money into the stock market. Then when it comes down, it gets transferred to the 1%. I think you know that, but most people have no clue about how this works. Markets run in cycles. This is a cycle. Let's just, again, go over the last two. Dot-com bubble, same thing. 2008, same thing. We're here again. Wake up and smell the freaking coffee. All right. So, with that said, despite what's coming out of the good cop, bad cop thing, we already know what just happened. I mean, the good cop, bad cop charade that was played on everybody with the last FOMC minutes or whatever the hell it was a couple weeks ago that got read, and you had Powell talking about how, we're going to keep the easy money going. It's a charade. We know that. However, I'm finally going to get there. That does not mean that the Federal Reserve is not going to nudge the federal funds rate 25 basis points next week. It's going to happen. And let me tell you how the market and the stock market and bonds are going to react. Number one, the Fed is going to raise rates. Watch what happens to the 10-year yield. It's going to drop. That's my take. It's not going to go higher. I know it sounds completely contradictory, but this is what happened the last time the Federal Reserve nudged the federal funds rate. Rates didn't go up, they went down. That's going to happen here again. And I'll tell you another thing that's going to happen. Stocks are going to respond in a positive way. Stocks will rise off of this 25 basis point hike. So forget what you're hearing, forget the nonsense, forget the rhetoric. It's garbage, it's dog shit, all right? I like using this term lately, as you can see. But that's how it's going to play out. We are going to get a rate hike next week. Rates will not go up. Despite the hike, they're going to go down, and stocks are going to go up. That's my take. Let's see how I nail this, all right? Could I be wrong? Sure, I could be wrong. But I've been wrong once since what feels like time immemorial, since 2008. It's ridiculous. So anyway, let's watch the game. It's a charade. You all know that. We are in a time of the year where the CEOs, the bigwigs at these corporations, they all get paid in stock. So every effort is going to be made to prop up the stock market. Speaking of which, stocks are higher right now. The dollar is higher right now. Bonds aren't doing much of anything. Gold and silver are under pressure. Cryptocurrencies are under pressure. I don't know what else to say about this. It's just crazy. Anyway, remember this video. Remember what I just said. And let's see how this plays out next week. It's going to be fun. I will refer back to this video at that time. However, again, you will see me at the end of the day. And we're going to summarize the whole lovely trading day. All right. I will see you then.